Good morning, traders. I don't know why this is not my normal screen. Oh, I know. Maybe I know. Yeah, there we go. All right. I just wanted to go over a couple of things from yesterday. I didn't make an extra video this week, but we're nearing rollover, and so you have a lot of really difficult wicks to deal with. I think there was one over here later in the day that I'd gotten into a position, and we have a 36 point wick. My stop's only about a 35 point stop, but I believe that wick right there got me. But I wanted to just show you what I call the telephone call on this particular day. So we had opened with a gap, came up. There's buy side from a 30-minute chart over here in the regular trading hours. And we didn't quite take that level once we opened, but we did come down, tried to push into the gap, but we failed. And so our rule on this reversal is the last up close candle, which would be that little bitty one right there, before the run on liquidity. And this is just to test whether or not we're moving in an algorithmic way. Like if the computer is delivering price or if we're being manually manipulated, or both. Sometimes it's both. But that candle, last up close candle before the run on liquidity, now we mark it out and we just start seeing will price eventually trade above it and respect it. So that's our bullish breaker. You could also mark that one out if you wanted to, but it doesn't ever take the low again. So that's important as well. The liquidity gets swept and we don't ever go back below this one. So we didn't make a new low. That's important to watch for. And then eventually we start trading above. Here we have candle bodies finishing above. And then they come back down into it, and the candle bodies, they respect this breaker. So now we know we've got something going on with that breaker. They're using that as a reference. We did pull away with a fair value gap from here, but I've gotten into trades there, and we didn't make a new high from here, so that right there would not be a good spot to enter. But if we use that as our line in the sand, so to speak, right now we're finished. We pushed above, and we did not go below with candle bodies, only wicks. And then we fair value gap up, watching this unfold. Fair value gap here, fair value gap here, and we come back down. Now, which fair value gap would you want to use? You could use this one. That'd be great. Or that one. That's always a little bit of a confusion for me. But I'm mainly looking at the breaker. These tell me we're lacking some upside potential. Now, this one did take that first minor buy side. We came back down. Candle bodies respected this fair value gap real nicely. And I don't know why that moved over. We did not come back down to the breaker, indicating we're lacking this upside. So entering somewhere around here would be a fantastic idea. We've respected the breaker, pushed away with fair value gaps, came back down and didn't even make it to the breaker. Entering in that candle or this one immediately after would be your safe bet for the other buy side right there. So this one would be minor buy side. When I see a buy side get taken like that, it does make me pucker up a bit, because a lot of times it will go back into the range. But this showing that we've respected it should be an indication that the upside is favorable. Now this is the high of the day so far, right here. And we took it, came back down. It's also the top of the opening range right there. Pushed back down into it a little bit, but didn't want to go any further. Now this, you could also mark as a breaker or a potential breaker, the top of that green one, but that is after the liquidity sweep. But trading above it is still a pretty good idea. And it didn't go quite down to it. So I like to keep it consistent when I'm marking out my charts. The last up close candle before the run on liquidity, that's what gets the mark. And we also did open with a nice gap up on this particular day. And we did not push back into it in the first 30 minutes. Only that far. That's as far into it as we got. So that's also indicating more upside. So all of those things adding up together makes this a good entry. And that would be what I would call the telephone call. So it is a difficult trading environment. I found it difficult to get into positions. I missed this entry, and then trying to get back in up here, I found to be very difficult. It was just lots of big wicks. My stop loss isn't but 25 points, and so when you're having 30-point candles, it's hard to stay in. The run up and run down, you get the FOMO. I don't know. It was a difficult week for me. I'll say that. Some of it had to do with lack of concentration and not being in front of my computer screen when the signal occurred and trying to chase. If you're not here when that occurs, my recommendation is don't chase, because it could turn out badly for you. There is another spot here you could have tried to enter, but would you have known we weren't going to sweep that liquidity? That's hard to say. We'd just taken buy side, poked back into it, didn't take liquidity. That would be an indication for a long, but why didn't we take it? So yeah, that's my setup. I heard a guy the other day talking about when you do your setups here and you're having trouble spotting them in real time, to screenshot it and put it onto a PowerPoint. And I think that's a very good idea. And then look at that thing in the morning before you get your trading started. So I actually started doing one over here where this was a previous day. We'd come down and we swept some liquidity. Oh, that's the next one, which I don't have the liquidity marked out. But we came down and swept liquidity. And the last up close candle before the run on liquidity is this green one right here. We went up through it, indicating a shift in market structure. We did not make a new low. Once we got back above it, candle bodies are finishing above it. When this pullback happens, you could enter there, or you could wait and try to get in somewhere up here for more potential upside. So this was a previous day. Looks like it was the 7th of March when I made this one. But I intend to put several of these on a PowerPoint, look at it each morning before the market begins, so I know what I'm looking for in these reversal patterns. Because when the market's running, a lot of times you get in the heat of the battle and everything starts to look like a good trade. So if you can mark your charts out like that, take a screenshot of it and put it into a PowerPoint, I think it will probably help you. I just can't see it not helping, and that's why I'm doing it. But yeah, this is the one for today. A little different setup, but still breaker respected. Trades above. Now we're good to go long. And just aim for buy side. Right now, because of the rollover week, the settlement's going to be on the 21st. You're going to see everybody's going to either have to move their position, and we're talking the institutions, governments, they're going to have to move their position. And so that's a lot of contracts being sold and rolled into the next quarter. You'll see a lot of big wicks, maybe 100-point wick or 100-point ranges. It's difficult typically to trade during that time, so you don't want to get in at a bottom expecting it to go all the way to the top in one big candle, or even, I mean, this was pretty quick run, really. You don't want to. You won't be wanting to hold and wait for something like that in rollover week. You want it to materialize fast, take that low hanging fruit, even if you don't get as much profit as you would like. The chances of getting smoked during that week is pretty high. You can see, if you look right here, the last down close candle before the run on liquidity would be that one. And we respected it. And you could aim for that low hanging fruit. And that looks like about a 50-point rundown. If that's the low hanging fruit we're looking for. But we never did sweep these lows. If you were putting your stop down here or your take profit here, you would have not made it. That's the kind of thing you see as we near rollover. Just doesn't quite take the lows. Still suffering from that cold, or allergies, or whatever it is. Had a big dust storm here in Texas. And yeah, don't feel wonderful, but I hope this will help you with your trading, and hope you can be really successful. Remember to be kind to yourself and be kind to one another. I love each and every one of you. Until next time, trade well.